morning, traders. The two big stories overnight were Euro hitting parity and oil coming off 8%. In fact, the whole commodity scene was weaker, as we can see it here. That's West Texas. This is Brent, gasoline, natural gas, copper, and the other precious metals across here also not doing so well. Copper the big one, as well as crude. Then we come into the softs and we've got cotton off, orange juice, sugar, coffee getting smashed, wheat, soybeans, cocoa, corn, nasty. Soy, they're all looking, oats, RJ, cattle, and the only one bucking the trend, so to speak. All that would indicate that not only is there a potential recession coming, but that inflation has peaked. And we have the inflation numbers coming out of the US tonight. So, with the US dollar, I'd be trading pretty cautiously around here. It's pretty hard. It's so far extended. We've got the certainly in the overbought territory. We're a long distance from the normal moving averages, so it's very tricky to try and be buying here, and even harder to try and be selling. So I prefer to sort of wait for the dip and then look to buy and run it into FOMC on July 28th. But we're running out of time. That's only 15 days away. So to get a dip and then buy it may not happen, because time's our enemy now. We might just get a little dip on inflation, or maybe even a push higher on inflation, then we'll get a pullback into FOMC, and then the story's all over, because that'll be most likely be the last move. Bonds a little weaker overnight as well. Looking at iron ore also getting smashed. So buying the Aussie dollar in this kind of environment, which is a major commodity market, is tricky. Buying US dollars is tricky. Euro though, tagged the parity perfectly, and then rallied. Came and had a look at it a couple of times. This is on a 5-minute chart. Bounced off of that at 5 pips away. Bounced off 5 pips away again. Tagged it. Tried to have another look and then said no thanks. And then into the close there was a big sell order in stocks. So yeah, pretty tricky to try and trade out here. Euro, like the US index, which is euro is 58% of the dollar index, is pretty tricky to try and sell out here, and even harder to try and buy. But that's the story across all the majors here. We're a long distance from moving averages, and we're pretty much at exhaustion or oversold area. CAD's not, and thanks to oil falling, you'd expect a weaker CAD and maybe trying to push through this 130 resistance. It might finally do that. Yen, the other interesting one of note, broke out of this sort of resistance zone and came back and tested that overnight. Again, this is buying US dollar and selling yen. Now, selling yen is fine when stocks are rallying, but when stocks are falling, these are both considered safe havens. So yeah, that too is a tricky one right now. I think the market's in a state of I don't know, not flux, but a situation where it's difficult for the next direction to move. I think the market wants to move towards that recession. The commodity markets are certainly leading that way, and bond markets are not sort of pushing further higher, which would suggest that interest rates have peaked. I guess the catalyst or a key component of trying to figure out what the direction is going to be over the next week or two will be tonight's inflation numbers. So tread carefully until then. Look for setups on the shorter time frame, and you're wanting to, as always, you're wanting to trade a stronger currency versus a weaker currency, rather than two strong currencies or two weak currencies. Yeah. Just a quick look at the indices, and as we can see, the stock market's starting to roll over again. And if interest rates have peaked, maybe the time is to be buying stocks, or that might be soon. However, from a technical point of view, I got short that yesterday. That's the S&P 500. But yeah, stocks are reasonably weak. We notice VIX, the fear index, is ticking a little higher as well. So that's the story. Again, just tread carefully this week with the inflation numbers out tonight in the US. Thanks, guys.